Hi everyone, welcome back to Saheb Academy. Today in this 11th video of cash flow statement chapter, we are going to solve this question, and this question is actually from May 2024 paper of CA Intermediate, question 3B, which was asked for 7 marks really, and it's a simple and easy question. The name of the question is, as you can see, Aarambh Limited, right? So let's just read this question and analyze what we have to do over here. Now see here, the following information is provided for Aarambh Limited. Okay, the information has been given over here. Two balance sheet details have been given, 31st March 2023 and 31st March 2024, the previous year and current year, or we can say opening balance and closing balance. So how we have to look? We have to look from left to right for all comparisons. Okay, all right. So first, what do we have? First, we have profit and loss balance. Okay, do we need profit and loss balance? See, if they give us net profit before tax, we can immediately take that. But if that's not available, we look for net profit after tax. If that is also not there, then we need this balance only. Yeah, we have to calculate retained profit, isn't it? How do we calculate retained profit? Closing minus opening. That's what we do. So here what do we have? See, 5,400 debit balance they have said, which means it's a loss. Okay, and 37,800 profit. So this is a tricky part for everyone. So now it's really simple. Understand what we are going to do is we are just going to do closing minus opening. Yeah, simple. The same formula we are going to apply. 37,800 closing balance of profit and loss minus opening balance, that is 5,400. Yeah, debit. But understand, formula is closing minus opening, but the opening balance is also negative. So what will happen? It will come in a bracket, minus 5,400, isn't it? So minus into minus, it will become plus, and both will be added, 43,200. Is it clear? That's how it is. This will be the retained profit after all adjustment. Fine. So from this profit, we will start our indirect method. Fine. Okay. Then see, we have provision for taxation. You all know, whenever there is provision for taxation, always we open a ledger account, don't we? Yes, always we open a ledger account, because mostly there will be some kind of adjustment regarding that. So see here, the opening balance is how much? 2,21,400, and the closing balance is 1,35,000. And then in the additional information, they have said income tax provided during the year 1,62,000. Now see the ledger account. It's really simple. Provision for tax, opening balance 2,21,400, closing balance 1,35,000. Yeah, as given in the question. That's what we do. And then what do we do? And then we see what they have said. They have said 1,62,000 has been provided. Yeah, the provision that has been created during the year. So it will come over here, 1,62,000, isn't it? Provision for tax increase because of the current year provision that we created out of profit and loss. What will happen to this? This is an appropriation. So what do? We add it in the operating activity under indirect method. If we are starting from net profit after tax or retained earnings. In this question, from where we are starting? From retained earnings. So definitely we will have to add this, right? Yes. And then in operating activity at last, we will subtract the tax that we have actually paid, 2,48,400, which is a balancing figure. Is that clear? Simple, huh? Yes. So that's what we are clear with. Provision for tax. Fine. Easy. Next, what do we have? Next, we have general reserve. Now see, in general reserve, what has happened? General reserve was 54,000 opening balance. From 54, it has become 81,000. How it has increased? Is there any adjustment regarding that? No, nothing. Then simply we can easily assume that we have transferred to GR how much? 81 minus 54. Yeah, we have transferred to GR how much? 27,000. Is that clear? Isn't it? 81 minus 54, that's equal to 27,000. So 27,000, appropriation we have done to GR. So that also we are going to reverse in the indirect method. We are going to add back. Do you want to see the ledger account? See, general reserve account. It's really simple. Opening balance 54,000, closing balance 81,000. You don't have to create ledger account for GR and all. I'm just showing you. You have to create this in your mind only. There is no adjustment, nothing. Directly you can understand. Is it clear? Simple. So 27,000, what you have to do? You have to add it. Yeah, if you are starting from retained earnings. Yeah, you have to reverse the appropriation in the format of indirect method. Yes. Okay, fine, understood. Next we have 12% debentures. Now 12% debentures, rate is given. You all know whenever rate is given, we know there will be interest adjustment, yeah, hidden interest adjustment. We have to calculate the interest and we have to consider that in the cash flow statement, isn't it? Yes, rate is given, so we will do that. Then what is happening to the balance? Opening balance is 1,18,800 and the closing balance is 2,91,600. So debentures have increased. If debentures have increased, that means what? There are no adjustment, nothing. Then you have to understand that there has been issue of debentures, isn't it? Yes, there has been issue of debentures. If there is issue of debentures, where it will be considered? In financing activity. But here they have just asked us what? Cash flow from operating activities. So it's not important for us right now. But that interest thing is important because interest will be considered in the cash flow from operating activities, isn't it? We are going to what? Reverse that, isn't it? Yeah, so we need to know how much is it, right? Then only we will be able to reverse that. Now tell me, how will you calculate this interest, this 12% interest? Will you calculate this interest on 1,18,800 or 2,91,600? You can make either of the assumptions, right? But understand in this question what is happening. In this question, the question is saying that, see, new debentures have been issued at the end of the current financial year. At the end of the current financial year, how much has been issued? See here, 2,91,600 minus 1,18,800. This much debentures have been issued, 1,72,800. But this has been issued at the end of the financial year. No interest has been generated on that. So only on the opening balance you will calculate the interest. 1,18,800 into what? Into 12%, into 0.12, that's equal to 14,256. Is it clear? So that is what you will do. Let me just show you the working note for debenture. See here, it's really simple. Yeah, 12% debentures account, opening balance, closing balance, this much issue happened. It has to be added in financing activity, but it's not important right now. We are not doing financing activity and all. Yeah, but the interest calculation is important. See here, calculation of interest on debenture, hidden adjustment, 12% rate is given. We have calculated on opening balance. Yeah, because this issue has happened at the year end. No interest has been generated on this. Yeah, only on the opening balance we'll calculate the interest. Is it clear? 14,256. Just now we saw. What are we going to do about this? It's really simple. In operating activity, we are going to add this, isn't it? It is an expense, no? Interest on debenture. So that expense has been debited in P&L. We have to reverse that because it is related with financing. Yeah. So we will reverse it from operating and then we will subtract it in the financing activity, isn't it? Because it is interest paid. Outflow has happened, right? So that's the thing. Okay. This is the treatment regarding the debentures. See here, question has said all additions have happened at the end of the year. That is why interest is calculated on the opening balance. Is it clear? Simple. You understood this adjustment also. Then trade payable is current liability. We will do that working capital changes. And then see 8% current investment they are saying. Now, is this current asset and will you take this in working capital changes? Tell me. No, you can't do that. Always remember, in changes of working capital, yeah, you only consider what? Operating current assets and operating current liability. Here they are saying current investment. Investment means it is related with investment activity. You can't consider that in working capital changes. Is it clear? Okay, understood. It will be considered in, investment activity. Whether we have sold the investment or we have purchased more investment. Okay, in investment activity we will see that. But that's also not important right now because we are just doing operating activity. But understand, here they have given us 8%. What is this 8%? You see, rate of interest is given. Yeah, maybe we have invested in debentures of any other company. So if rate of interest is given, again the same thing, hidden adjustment is there. Yeah, so we have to calculate the interest income over here. Above we calculated interest expense, here we have to calculate interest income. So see what has happened, from 54 it has become 1,08,000. Yeah, so we have purchased more investment. That's fine, but it's not important for us. For us only that interest thing is important. So see here, it's really simple. 8% invest, 54,000 was the opening balance. It's an asset, right? So opening balance on the debit side, closing balance on the credit side. 54,000 more investments we have purchased. Yeah, it will be subtracted in investment activity, but that's not important. The important thing is 8% interest rate is given, so hidden adjustment. Okay, and the same logic here also the question has said that investment have been acquired at the end of the current financial year. So that means the interest income will be calculated on the opening balance only. See, on this 54,000 only, not on 1,08,000. Is that clear? Because this has happened at the year end. No interest has been earned on this 54,000. Yeah, only on the opening balance we will calculate 54,000 into 8%, that is equal to 4,320. What is this? This is interest income. So what will happen of this? It will be subtracted in operating activity because it is credited in P&L. We have to reverse it because it relates with investment activity. Yeah, so this income will be reversed in indirect method operating activity by subtracting, and then it will be added in the investment activity. Is it clear? The interest which is actually received. Fine, simple. So you are done with this adjustment. Next, what do we have? Property, plant and equipment. Nothing we have to do about this. Okay. Then we have accumulated depreciation. Now this is important because depreciation we reverse as a non-cash item in indirect method. So see, we can easily get to know the current year depreciation. There are no adjustment, nothing, simple question. Directly the difference between these two balances will be the current year depreciation. Is it clear? How much is it? 1,62,000. Yeah, 1,62,000 minus 1,29,600, that is equal to 32,400. Okay, see, the logic is really simple. Accumulated depreciation means collection of depreciation. So collection of depreciation was 1,29,600. It increased by 1,62,000. Why it increased? It increased because of current year depreciation. That's the logic. Fine, 32,400. So 32,400 depreciation you have to reverse. You have to add as a non-cash thing, yeah, in indirect method. Fine, understood. Then trade receivable, working capital changes, we'll see that. Provision for doubtful debts, this also we can consider it as current liability. Actually it's contra asset but current liability, and we will consider it working capital changes only. Fine. Inventory is also the same, cash and cash equivalent, last item, but we are not going to do anything about that because understand, cash and cash equivalents will come at last, but we are not doing at last things and all. We are just doing till cash flow from operating activity. See here, you are required to calculate net cash flow from operating activity. So let's just see the solution of this. It's really simple. Now see here, we have the solution. Cash flow statement of Aarambh Limited for the year ending 31st March 2024 as said in the question, and we are doing this as per indirect method because we saw the question how it was given and everything. Yeah, it can't be solved by direct method, isn't it? Yes. So see here, cash flow from operating activities, that's what we have to do. First, what do we need? We need profit. We don't have net profit before tax, net profit after tax. We had to calculate what we had to calculate retained profit, profit after all adjustment, closing minus opening balance of profit and loss, closing minus opening balance. Yeah, 37,800 minus 5,400, that's what we did. So it became plus, minus into minus plus. So 37,800 plus 5,400, that was equal to 43,200 retained profit after all adjustment. Then we have to reverse all appropriations. You all know the first appropriation was, we came to know about general reserve, that we have transferred how much? 27,000 into general reserve, isn't it? So that 27,000 we have to reverse now, isn't it? Reverse appropriation, transfer to general reserve. We will add and reverse it. Yes. So that is equal to 70,200, which will be net profit after tax. Yeah. Then we have to reverse the tax provision also, not tax paid, tax provision, isn't it? So how much was that tax provision? It was 1,62,000. The question only told us that, right? Isn't it? We made the ledger account also. Yeah. Opening balance, closing balance was there, and then we came to know this about the question. The balancing figure was the tax paid. So first we reverse this 1,62,000 to get what? Net profit before tax. See here, tax provision, we will add 1,62,000, we will get net profit before tax and extraordinary item, that is 2,32,200. Simple. Okay, net profit before tax and extraordinary items. After this, what do we need to do? We have to reverse all non-cash and non-operating items, isn't it? So first non-cash we can all think about is depreciation, isn't it? Depreciation, did they give us depreciation? No, they gave us accumulated depreciation. I told you there are no adjustment, nothing. Simple. If like this is given, then easily we can find out depreciation, just the difference between the accumulated depreciation accounts, right, between the two balances, isn't it? If you want, you can see the ledger account, see opening balance, closing balance, the difference between that is 32,400, which is nothing but current year depreciation. So depreciation you will add back and reverse. See here, reverse non-cash non-operating item, depreciation we have added back and we have reversed it. Is it clear? Simple. After this, in the question, do we have any more non-operating items or non-cash items? Yes. See, there was what? Interest hidden adjustment. In debenture also, in current investment also. In debenture it was interest expense. What happens to interest expense? Interest expense is what? It is indirect expense which is debited to P&L. It is subtracted. So now what we have to do to reverse, we have to add, right? We came to know interest on debenture is how much? 14,256. So we have to add in operating activity to reverse it. Interest on debenture expense 14,256 we have added and reversed it. Clear? Then we have interest income on current investment, right? How much? 8%. Yes, we calculated that. How much was that? 4,320. Now understand, interest income is what? Indirect income which is credited in P&L, which has been added. So now what we have to do to reverse, we have to subtract. Yeah, so see, interest income on investment 4,320 we are subtracting. Is it clear? So we'll subtract and reverse. Is it clear? So 2,32,200 plus 32,400 plus 14,256 minus 4,320, that is equal to 2,74,536. This is called as operating profit before working capital changes. Then what do? We do working capital changes. In working capital changes, we just go back to the question. We see all the current assets and current liabilities. Yeah, what's the change that is happening, whether they are increasing or decreasing. Yeah, and we know the trick, isn't it? We have discussed the logic and everything in the first video only. This is the trick that we have. Current assets and cash are negatively related, current liabilities and cash are positively related. So current, first what do we have? Current liability, trade payable. See, from 1,29,600 it has decreased to 1,18,800. So how much decrease has happened? 1,18,800 minus 1,29,600, that is equal to 10,800 decrease has happened. So if there is a decrease in current liability, that means negative impact on cash. Yeah, if current liability is decreasing, cash is also decreasing. Fine, that's the logic. So because of that, we have to subtract. Decrease in trade payables 10,800. Is it clear? Simple. Next, current asset we have trade receivables. From 81,000 it has increased to 2,61,360. 2,61,360 minus 81,000, that is equal to increase of 1,80,360. Current asset is increasing means cash is negatively impacted. Okay, so we will subtract it. Fine. Increase in trade receivables minus 1,80,360. Fine, simple. Next we have C, provision for doubtful debts, which we consider it as current liability. So from 27 it has become 54,000. So how much it has increased by? 27 only, isn't it? 54 minus 27 is 27 only. So by 27,000 it has increased. So we have to add 27,000, isn't it? It's current liability. So increase in provision for doubtful debts plus 27,000. Is it clear? Easy. Next we have see inventory. In inventory, what's happening? From 1,35,000 it has become 81,000. It has decreased by how much? 81,000 minus 135, that is equal to 54,000 decrease. So we are going to do what? We are going to add 54,000. Yeah, current asset is decreasing means positive impact on cash. Decrease in inventory 54,000. Is it clear? Simple. So if we just do the sum, 2,74,536 minus 10,800 minus 1,80,360 plus 27,000 plus 54,000, that is equal to 1,64,376. This is cash generated from operations. Now what we are going to do? Now we are going to subtract the tax paid, isn't it? Yes, and the question is over. How much tax paid? Tax paid is, just see the ledger account, the tax paid is how much? 2,48,400. So minus tax paid 2,48,400, that is equal to that is equal to net cash used in operating activities. Yeah, 84,024. okay, this is also negative. So see here, let me just show you. 1,64,376 minus 2,48,400, that is equal to, see, negative it is coming, minus 84,024 rupees. Is it clear? So if it is negative, then we say net cash used in operating activities, 84,024. Is it clear? Simple and straightforward. Yeah, this is how you have to solve this. In this question, everything was simple only. It's just that here we had what? That, you know, negative balance over here. So you got to know how you have to do it. Minus minus, it will become plus. And then hidden adjustment was there, 2 hidden adjustment on current investment also. And then yeah, that's all, nothing new. Yeah, all easy only. So that's it. Yeah, I hope you have understood each and everything. I will upload the notes and everything on the Telegram channel, Saheb Academy 7. You can get it from there, right? So that's it. See you in the next video. Bye.